A new study finding inflation is hitting rural America much harder than people living in major cities. According to a report from Iowa State University, rural households are now using 91% of their income just to survive. Think about that. Their earnings are not able to keep up with inflation either. In fact, income in rural areas fell far more than those in urban areas. Study found rural discretionary incomes dropping by 40% this year, in urban areas 14%. And joining us now to talk more about this is chief economist and global strategist of Europac.com, Peter Schiff. Sir, thank you for coming back on the show. We do appreciate it. The last time that we spoke, you painted a very ugly picture about what's coming for the American economy. Has that changed at all in the last couple months?
No. In fact, if anything, the picture is getting uglier.
Yeah, what are you seeing now? What's coming down the pike?
Well, I think we're now in recession, which was something that I had been predicting. So inflation got stronger as the economy got weaker. Yeah. And I think this recession is just getting started. It's going to last a long time. But when you're talking about families that are struggling with inflation, they're really struggling with government, because inflation is a tax. It's the way government finances deficit spending. Government spends money. It doesn't collect enough taxes, so it has to run deficits. The Federal Reserve monetizes those deficits, prints money. They call it quantitative easing, but that's inflation. Yeah. And government is getting bigger and bigger, and families across America are going to have to bear that burden through higher prices.
And we've had, I mean, if you look, it's been so interesting for me to look back through the last 40 years and even longer. And you see this stretch where interest rates were just incredibly low for, I think, about the last 10 years. And you look at that in comparison to the 90s, especially the 80s and even the 2000s, you didn't have that. And we're about to pay a really, really big price for all of that very, very cheap money we've had since Obama.
Yes, because the interest rate should reflect the free market, not price fixing by the government. Yeah. And by artificially suppressing interest rates, the Federal Reserve really screwed up this economy. A lot of things were done that never should have been done. A lot of mistakes were made, malinvestments, misallocation of resources, and now we're going to have to pay a heavy price to unwind all those mistakes. That's why this recession is going to be so severe. That's why this financial crisis is going to be worse than the one that we had in 2008. And anything the government does or the Fed does to try to prevent that just makes it worse.
You know, people right now are freaking out about interest rates. You know, I've got a friend who's got a business, and his rates on his business loan are going up right now. It's not locked in. But if you go back into the early 80s, the last time we had inflation like this, these were the rates that it took to get Carter's inflation under control. And we're seeing a lot of comparisons right now between Biden's inflation and Carter's inflation. Those rates are, and this is nowhere near, what we're seeing right now is nowhere near what it took back in the 1980s. How bad do you think this is going to get? I mean, they're talking about raising the rate, you know, this week up to 2.25% as the Fed funds rate, right?
Yeah, that's still much too low. That's an inflationary, highly stimulative rate when you have the rate so far below inflation. But remember, inflation under Carter didn't start with Carter. It was building for a long time. And the same thing with the inflation under Biden. But it's getting a lot worse now with Biden policies. And the Federal Reserve is continuing the failed policies since the Greenspan era began. But the other important distinction is when you go back and look at those inflation numbers from the Carter days, we had a very different CPI. If we were still using the 1970 CPI today, our inflation would be closer to 20% a year than 9% a year. So it's actually worse than what we were experiencing back then, yet interest rates are still so much lower. So that lets you know just how much bigger this inflation problem is going to get. Plus, the budget deficits we have today dwarf the ones we had back then. So the amount of money that the Federal Reserve is going to be creating in this decade is so much more than was created in the 70s. So this is going to be much worse stagflation. I've been calling it an inflationary depression. That's what we're entering.
And it'll last years, you think, real quick?
Well, it's just going to get worse. Yeah, I think the whole decade. I don't know what it's going to take for the government to finally do the right thing. But the only way to solve the inflation problem is to dramatically cut government spending and to allow interest rates to rise to a market level. Now, when that happens, you know, it's going to be terrible as far as asset prices collapsing, failures, bankruptcies. Exactly. But we're going to have to endure that to get to the other side. If we want a real economy, then we're going to have to experience a real recession to get there.
Will the government even allow that to happen is the other question. Peter Schiff, thank you so much for joining us tonight. We do appreciate it.
My pleasure.